Learning the definition of a subprime mortgage. This article is the copyright of www.subprimemortgageplan.com. Looking at the definition of a subprime mortgage involves diving into all of the details that pertain to how consumers are classified, and also takes a good look at the subprime mortgage crisis as well. The answer to what is a subprime mortgage is not always easy to answer, but taking time to study all of the details makes it much easier to resolve. In a day and age like this, it is critical to be capable to define subprime mortgage terms. The number of people who are suddenly falling into the category are often left scared and confused because they are unsure about what is going on around them. Making sure that you are aware of what is a subprime mortgage, it is often necessary to look at the entire picture and gather a complete look for an explanation of subprime mortgage crisis. The answers to what is a subprime mortgage is not always easy to answer. Many of the mortgages that were previously offered were considered prime and have since turned to subprime rather quickly. In the quest to answer exactly the definition of subprime mortgage, it is necessary to look at the credit scores that are typically amongst those subprime borrowers. Generally speaking, a subprime mortgage is given to borrowers who are not considered prime borrowers. Of course, prime borrowers are those consumers that possess good credit and are offered the lowest interest rates available. This leaves borrowers with bad credit lumped together as subprime borrowers. Ultimately, the consumers who are considered less than desirable amongst lenders are often extremely risky as well, which has helped to greatly add on to what is subprime mortgage crisis that is currently happening. With consumers all around the country nervously watching the housing market, many consumers who were once secure in their homes are suddenly at risk of being forced out. The simple explanation of subprime mortgage crisis is that many lenders started loaning money to anyone, regardless of their actual ability to repay the debt. Now that the interest rates for many loans have started to reset to substantially higher levels, there are literally thousands of borrowers who are not able to make their payments. Overall, the subprime mortgage definition has started to expand as the credit score that is used to classify consumers as subprime has slowly started to increase. While in the past, consumers with scores that were under 550 were considered subprime, that number has started rising much closer to the 600 range. This finds a lot of consumers who are otherwise quite capable of paying for a mortgage begin to decline because of fears over what is the U.S. subprime mortgage crisis. Looking towards the future, the housing market is very much likely to balance out. The sad problems that emerge from the mortgage crisis is the actuality that it has caused economic problems to spread far beyond the housing industry. This leaves even more consumers in a very shaky ground, which is doing nothing more than spreading the mortgage crisis even further than it currently is. Looking towards the time when the subprime mortgage definition is not as essential to repairing the economy is a time that will perhaps be in the near future, but lenders for a very long time are going to be much stricter in their lending practices to avoid experiencing another subprime mortgage crisis. For more information on subprime mortgage loan, visit www.subprimemortgageplan.com, and that's subprememortgageplan.com.